We usually have you on a call to talk tech. We're having you on to talk tech right now, but you've actually been looking at major retailers, including Walmart and Target, and you say their comments on things like supply chain and inflation have actually been insightful about the rest of the market, especially tech. You're saying that people shouldn't have really been surprised by Snap because what Walmart and Target had to say should have been a warning. Can you kind of explain that?
Yeah, so in an environment where we're worried about whether the Fed is going to raise rates to the point that we end up in a recession, the focus has to be on those main street telltale signs like a Walmart and a Target, because if we're in a recession and people aren't able to go and buy the same detergent and toothpaste and those kind of things they normally would buy, regardless of what the price is, right? Then we have to be concerned that that's going to trickle through the rest of the economy. So we look at names like Gap and maybe TJ Maxx and things like that as far as the apparel side is concerned. Nobody's going out and buying that next T-shirt, right, when they're worried about whether they're going to still have a job or whether inflation is going to cut that paycheck. And the same thing on the other side as far as toiletries and regular staples. And so that's why Walmart and Target numbers were quite ominous for the market, anybody who's looking for an indicator of whether we're actually in recessionary times or not.
So, question, do you believe that Snap is actually an indicator? Snap has really faced a lot of stiff competition from Instagram, from Twitter, a lot of people moving into that same space of those really short videos. I was just on Instagram yesterday, and a lot of people are just moving away from even posting a post. They're doing like a lot of reels, which are very similar to what Snap really offers you. Do you think that Snap is really a precursor of what we're going to see from other big tech companies, social media companies going forward? Many of them have had pretty solid revenue growth. It's just not at the same level we saw during the pandemic.
I don't. I actually am surprised that so much attention has been paid, or the fact that we're even looking at Snapchat as a precursor for what ad revenue is going to look like across larger, more established companies like a Google or even a Facebook that owns Instagram, like you're talking about, where those are much better run companies, I would imagine. If we looked at Facebook's numbers and said, oh my God, they're down 50% or so for the year, and they're foretelling, very tough ad revenue numbers, then I'd pay a little bit more attention to that and care a little bit more. But Snapchat has actually been a little bit of a dying breed since TikTok became a thing here in the States. And so I think it's really a matter of the competition that they're up against more so than them being able to foretell us what the ad spending timeline looks like. But I will say to that really quickly, if folks are worried about recession, if companies are worried about recession, the first place that gets cut is the ad budget. And so it would make sense that we'd see like Google down on those numbers, Facebook down on those numbers, and so forth.
Well, Malcolm, you don't just talk tech, you also manage money. So you shared some Goldman Sachs research with me about bonds and stocks. You say over a 6-month horizon, if you look at that horizon, only 9% of the time that bonds and stocks move in the same direction, negative. And you pointed out the VGIT, that's an ETF for the Vanguard Intermediate Treasury Fund. So looking at that, what does it say to you, the fact that bonds are lower for the last 6 months as well as stocks?
Yeah, so we're supposed to be able to see this seesaw effect, right? When we look to the stock market, the S&P is down 17-18%. That should mean that I'm able to go to the bond market in a place like the Vanguard Intermediate Term Treasury, as your example, which tracks like the 2s, the 5s, and the 10s, the treasuries. I should be able to go to a place like that as a safe haven and at least say, if I'm not going to make a ton of money here, at least I'm not going to lose anything. But since like November, December of last year, where the market started its sell-off, the Vanguard Intermediate Treasury that we're talking about is down across the board at that same. It started selling off about at that same time. And so it's a very scary time if I'm an investor looking for what that safe haven trade is, because even just going to cash isn't necessarily the answer when we've got 8% inflation eating at that dollar. And so it's just a really tough time to be able to say like, well, if the market is doing this, then I'm supposed to do that, when everything is sort of selling off, positively correlated, to use your terminology there.